Lesson 12, Trading Pennants. By the end of this lesson, you will learn why pennants form, that the markets consolidate and form pennants in a natural 618, 786 Fibonacci numerical sequence. You will learn how to find and draw several different pennants, how to locate the buy and sell zones of a pennant, how to trade that pennant, and how to create that trading plan and trade your plan. And more importantly, where to place your protective stop-loss orders and financially protect yourself in every trade. Now, as we all know, objects in our lives vibrate as they move. Sounds vibrate, which create music. The earth can shake and vibrate, which can create earthquakes. The ocean, as it moves, it vibrates, creating waves. Water, calm water that a boat goes through, creates waves, vibrates. All the radio and television transmission waves, they vibrate as they move. Your cell phones, they vibrate. The monitors that monitor the heartbeat, they vibrate as it waves. Piano strings, guitar strings, harp strings, they all vibrate as they move. Look at on a piano, key C vibrates at 264 vibrations per second. Key E vibrates at 330 vibrations per second. Key A vibrates at 427 vibrations per second. And we learn that when like key C and key A vibrate together, that if you divide key C of 264 vibrations per second with key A, then you have a 0.61A vibration, which then can create goosebumps when the ears hear it, because the ears like to hear things that are in Fibonacci harmonic sequence. Now, waves, when a wave hits or starts, it vibrates until it dissipates. Envision calm water and envision a boat going through that calm water and disrupting the wave. Look at how after the wave begins, it starts to dissipate slowly until it starts to go calm again. Now, in the financial markets, they also wave and vibrate. It looks like this. All of a sudden, a rally takes place, and then you have the retracement or pullback. And many times within the A, B boundary, you will see a vibration start to take place or a Fibonacci numerical sequence vibration. It looks like this. Here's how a pennant forms. After you get the initial move, which is your A to B, then the market retraces back to a C. Now look at the blue line. A, B, pull back to a C. Now in a pennant, there will be no D extensions. There will only be ABCs. Look at how then we start with this low A, come up to the B, which is green, and then it forms a C. Then you have the red, A, B, C. Then if I was to draw perhaps a purple, A, B, C. Then an A, B, C. Then an A, B, C. Then an A, B, C. Look at how the market keeps on retracing back until it finally dissipates. Looks like this in the market in a chart. A, B, C. Look at how we have the green. A, B, C. Then a new A, B, C. And it keeps on going. Another A, B, C. In reality, what's taking place is it's retracing the original AB back to a Fibonacci number. Normally, when the market vibrates, it's going to vibrate in a 618 or 786. Look at how this retracement right here is the 618 of this AB. See how it's the 618? And this 786 is the 786 retracement of this A to that B. And this retracement is the 786 of this A to that B, and so on. Now, what causes the waves in the markets? Just like if you were looking at a lake and it was nice and calm, and then a boat goes through it, all of a sudden, you start to see the waves begin. In the market, a fundamental announcement is like the boat going through the wave, and there the wave begins. See, before or after the announcement, as a rule, the financial markets vibrate in a natural Fibonacci numerical sequence. They vibrate back and forth until they start to dissipate, or until another fundamental announcement creates a new wave. To find the pennant of that wave, all you need to do is draw your trend line across the highs of resistance and across the lows of support. That's all you need to do. That then finds the pennant, just like we see it here. See how I drew a line across the highs of resistance and across the lows of support? That is then called a pennant. Now, pennants are a form of consolidation. Pennants usually form after there has been a fundamental announcement or a large breakout. They can also form right before a fundamental announcement, as they are considered a form of consolidation. Pennants may form when prices have reached the value that traders are willing to pay or not willing to pay. Pennants may form when traders are not trading and waiting for perhaps the next fundamental announcement. When traders spot a pennant, which is a form of consolidation, they anticipate a breakout. A breakout is when prices break out of a sideways pattern or pennant accumulation and break through either line of support or that line of resistance. Now, if the bulls take control of the market, they will break out to the north and start to establish new highs. If the bears take control of the market, they will break out to the south and establish new lows. It'll look like this. This line right here is your resistance line. This line is your support line. This is basically a downtrend line. This is an uptrend line. On the north side of all trend lines is the buy zone. On the south side of the trend line is the sell zone. What is really taking place is as it consolidates, it gets tighter and tighter and tighter until it pops. Looks like this. See these pennants? Buy zone, sell zone. Buy zone, sell zone. And as a rule, pennants break out in the direction of the previous trend. Now look at the trends. Before these markets started to pennant, where was the trend? Well, we're in an uptrend here. And these pennants broke out in the direction of the previous trends. Now there are different shaped pennants that appear on all time frames. One is called the flagpole pennant. The other one, an ascending triangular pennant, a descending triangular pennant, a diamond pennant. Now, as I show you these pennants, the rules for trading all these different pennants are the same. A flagpole pennant, okay? The market is moving in a Fibonacci sequence, bouncing off the support and resistance trend lines and getting tighter and tighter in an equal sequence. See how it's equal? Okay? In this pennant, it can break out either to the north or south, but predominantly breaks out in the direction of the previous trend. Let's look at it on a chart. See how the previous trend was up and then the market started to vibrate? it was in the A-B boundary, and then it got tighter and tighter and tighter, and then broke out. We entered into the buy zone. After the breakout, it starts to pennant again. See how you draw your line across the highs of resistance and lows of support. Then it broke out again into the buy zone. See how the breakout is usually in the direction of the previous trend? Now this is what's called an ascending pennant. The market creates equal levels of resistance and higher levels of support. The lows of support are ascending. The breakout on these pennants are usually to the north, but nothing is 100%. So here's what it looks like on a chart. See how we're creating higher lows but equal levels of resistance, and then you see how the breakout went to the north. See, the fact the market is creating higher lows is the sign that the market will probably break out to the north. It more or less has an 80% chance of breaking out to the north. Now, nothing is 100%. And that's why you need to trade with protective stops. Look at, what if you just said, I'm not going to trade with a protective stop because everything's just 100%. That's just how it is in the market. It's not 100%. You can only deal in what's called high percentages versus low percentages. There's still that 20% chance it could go south. Now look at this one. Here was an ascending pennant where the market ended up going south. If you didn't have a protective stop, you're in a world of hurt. Now this is a descending pennant. It creates equal levels of support and lower levels of resistance. The breakouts on these are usually to the south, just like you see it here. Here is a descending pennant, and of course the breakout was to the south. Here's a diamond pennant, and here's where the market creates, as it starts to pennant, it creates larger levels of support and resistance. It expands, then contracts. But be that as it may, it's predominantly within the A-B boundary. Now look at us. Here we are, A, B, C, D. A, B, C, D. A, B, C, D. A, B. Now look at how we're in the A-B boundary, and it just keeps on going back and forth until it breaks out predominantly in the direction of the previous trend. You see that? Now here's a trading exercise. You find the pennants. Here's a trader's tip. When you think you see a pennant, draw your trend lines across the highs of resistance and the lows of support, creating a pennant. The highs and the lows should be getting closer together. Pennants form on all time frames, 5-minute charts, 10-minute charts, 20, 28-minute charts, 33-minute charts, 1-hour charts. Believe me, it's just not the normal 5, 10, 15, 20, 25, 1 hour, 2 hour, 3 hour. It can be an hour and 33-minute charts, and you're still going to see pennants. Now, find the pennants on this chart. Go ahead and put the machine on pause and see if you see them. These are the pennants. Now, I've already taught you the buy and sell zones. Do you see how to trade these? See, when the market breaks out in the buy zone, enter according to the rules of the buy zone. Do you see any pennants on this chart? Go ahead and connect trend lines. See if you see any. This is a big pennant. You see how it did not go in the direction of the previous trend? The previous trend was up. The market broke to the south, And after it broke out, look at how it came back to the backside of the trend line, then fell. Do you see any pennants here? Draw the trend lines on the pennants. You draw those trend lines connecting those levels of resistance with those levels of support. This is a descending pennant. You pretty much have equal levels of support. They are rising a little bit, but overall you have a dramatic descension where the market is making lower highs. Do you see any pennants on this chart? I see quite a few. Go ahead and put your machine on pause and see if you see any pennants. Here they are. The trend is up. There's a flagpole pennant. Here's a nice ascending pennant right after the breakout. Here then became a diamond pennant and then continued to break out in the direction of the previous trend. See how the market broke out here and then retraced back to the backside of the trend line and then bounced with an engulfing bullish candle? Look at here how it finally broke out here, U-turned, bounced on the backside of the trend line. Remember, this was resistance on the south side and support on the north side. Look at these nice tweezer bottoms signifying the next rally. Okay, here's your trading rules for trading the pennants. Just like the rules for the buy and sell zones. Once you establish a pennant, wait until you get a complete candle, body only, on the south side of the pennant or the north side of the pennant. See, if you have that a pennant, wait till you get a complete bearish candle on the south side. Now, listen to what I'm saying. You need a complete bearish candle on the south side and a complete bullish close candle on the north side. When the market broke out here, you didn't have a bullish candle. Don't enter unless you have a complete closed bullish candle. Now, step 2, you then need to find the backside of the uptrend line after the breakout, which will now act as resistance. Look at the angle of the uptrend line. If the breakout is to south, try to determine that if the market were to rally right now, would this line be lower than the high? Because the backside of this line is resistance. Now, if the backside of this line is lower than the high, there's an 80% chance of a continued fall. If the backside of this line is higher than this, there's about an 80% chance of a continued rally. The backside of the uptrend line acts as resistance, and as time moves, it moves up as well. And resistance moves with it, which means the market could rally. If it's higher than the last high, there's a high potential of a continued rally, and there may be an uptrend shifting of the trading channel. So always look for the backside. Now, in this case, when it broke out to the south, the backside of this trend line was clearly way lower than the last high. So now we're in the sell zone. We'd want to take advantage of shorting the market once it entered into the sell zone. Now you need to look at equity management. If after the breakout to the south, remember the market waves in A, B, C, D, very seldom will it just break out and fall like a rock. It'll probably wave back. If when it breaks out, the last high is too far away, you may want to wait until the first wave takes place and get in with either it hitting the backside of the trend line or with the creation of a candlestick formation. Let's look at here. The market broke out to the south. The last high is way too far away. This is probably a, let's see, 10, 20, 30. You know what? Actually, this isn't that far because we're looking at a 10-minute chart. Uh, Actually, this would be okay. But look at how the market broke out, pulled back, hit the back side of it, and then created an engulfing bearish candle. This is a better deal to get in on the engulfing bearish candle because then the market really went our way from the beginning. Normally, if you see candles like this, you're looking at predominantly, 60 to 100 pips. And in that case, you may want to pass on the trade. But believe it or not, this would be okay. This is just a better deal putting your stop order at the other side of the trend line or above the engulfing bearish candle. Now, if the pennant breakout is to the north, you want to wait until you have a complete bullish candle on the north side of the pennant line, just like you see it here. In this case, now these are 20 pip increments. Market breaks out. Here you'd be buying this first candle. Look at how the market pulled back to the back side of the trend line, bounced and rallied. You could have easily, because equity management allowed you to get in on this bullish candle with a stop at the last low down here, or wait until it pulled back and entered on this bullish engulfing candle. Here's a trader's tip. You must wait until you have a completely closed candle. Do not enter the market just because a candle is breaking a support or resistance trend line. It could be a false breakout. Now let's look at here. Here the market broke out of resistance, but did not give you a bullish candle. Once again, wait until you get that bullish candle. Could be a false breakout. Now that this broke out to the south, I'll bet you're real glad you didn't enter this market on this breakout. Step 2, you then need to find, if it breaks out to the north, find the backside of the down trend line, which will now act as support. Look at the angle of that down trend line. If it is higher than the last low, then you have about an 80% chance that the market will rally. If the angle of that down trend line is lower than the last low, you have an 80% chance of a continued fall. So the backside of that trend line and its angle is real critical because it's acting as support. Now, when the market breaks out, if equity management doesn't allow, remember the market waves in its A, B, C, D fashion, you may want to consider waiting. If equity management allows, then go ahead and get in because the angle of the backside of this trend line was much higher than the last low. And as always, we need to look at equity management. If you want to buy the market when it enters into the buy zone, you have to address the potential loss should it reverse. So always look at your equity management with your stop order going at the last low or on the other side of the trend line. This is what I would consider good equity management. You may want to put your machine on pause and study this. Now let's trade a pennant. Here's the rules for trading the pennant in the buy or sell zone. As always, draw your trend lines, inner, outer, and long term. This will help you determine if you're in an uptrend, downtrend, or if a trend line has been broken, signifying the potential end of a trend, or the 1, 2, 3, 4, 5 reversal. Draw your pennant trend lines and determine what type of pennant you have. Ask yourself, is it an ascending pennant, a descending, a flagpole, or a diamond pennant? Now, find the buy and sell zones of the pennant. Find the backside of those trend lines, which will be potential resistance or support after a breakout. Create an if-then situation. Spread your Fibonacci tool and see if you can find a potential convergence of an entry at a fib number or the backside of a trend line of the last ABCD waves. Now, look at the direction of the previous trend. If it's up, you have about an 80% chance of the market continuing north. If it's down, you have an 80% chance of the market going down. Remember, the ascending pennant will probably create a breakout to the north, and a descending pennant will create a breakout to the south. But nothing is 100%. So don't forget that if you do get in, you've got to find 4 levels of support or 4 levels of resistance, depending on which way it breaks out, and you need to pick a location where to get out. If your stops are too far away, you need to pass on the trade. So don't forget, you need a completely closed bullish candle on the north side or a completely closed bearish candle on the south side of the pennant lines. Now, if your broker allows you to straddle, you can straddle that pennant, provided you're not in a major fundamental announcement. Okay, you can literally place a buy order above the high or a sell order below the low if we're in front of a fundamental announcement. I don't like to really straddle pennants with no fundamental announcements. I would rather wait until you get that closed candle, because there could be a false breakout to the north that would take you in, or a false breakout to the south that would take you in. So on non-fundamental days, I don't recommend a straddle. I recommend you watch the charts, wait till you have that closed candle, but you can set alarms on the MTI 4.0. You can go in and say, okay, the market's pennanting. If the market hits this level, I want the computer to ring. If it hits this level, I want the computer to ring. I want the alarms to go off, so I don't have to sit there and stare at the screen. So in a case like this, if there was a fundamental announcement, you may want to straddle the pennant. This way, when it breaks out to the north or to the south, it automatically takes you in. If there's no fundamental announcements, you may also want to set your alarms so that when it does break out, it'll contact you, or your computer will ring, and you can then look at the charts and see where's the best place to get in. Placing your stop orders. Now I want you to think about something. In a downtrend, the south side of this trend line acts as resistance, the north side support. In an uptrend, the north side of the trend line is support, the south side is resistance. The south side is the sell zone, the north side is the buy zone, and resistance, when the market crosses over, turns into support. Just like here, when the market crosses over the uptrend line, support turns into resistance. If you trade the first candle that breaks out of the pennant according to the rules, and the last low is too far away, you can use the other side of the trend line as a place to place your stop order. Remember, trend lines are levels of support and resistance, and after a clean break of a trend line, the support lines turn into resistance and vice versa. So, in this case, market broke out even here. Didn't get a full bullish candle. See how it broke out to the south? Now it acts as resistance. There's where you can get in on an order. Now, always fill out your trader's worksheet. It's real critical you fill that trader's worksheet out. Do your homework before you trade, so you are clearly aware of where the market has been. Show me where it's been. I'll tell you where it's going to go. create that trading plan, and then trade that plan. Buy into that trader's mantra, which is the market will meet the criteria of my trade, or I will not trade. Now, as you turn on the computer, draw your trend lines. This will help you determine the direction of a trend. See if you have any pennants taking place. In this case, we have an ascending pennant. See it right there? See, I see a clear ascending pennant. This then is the sell zone. This is the buy zone. If this market breaks out to the north, then I'm entering. Believe it or not, though, we're in an uptrend. This is an A. This is a B. Here we had a morning star. You had an opportunity to get in right here. Here is a second entry. Look at this engulfing bullish candle. You could enter now with a stop below this low. And even now that you have a stop reverse, even a stop reverse, which if it breaks out to the south, you would reverse your position and go with it. So if you were straddling this and it broke out to the south, your stop order would be above the last high. If it broke out to the north, your stop order would be at the last low. Now, in this scenario, okay, because I don't have space for chart above, the next thing you need to do is create two trading plans, especially if you're in front of a fundamental announcement. Create two trading plans and envision the wave of where the market's going to go. In this case, here's support 1, here's support 2, here's support 3, support 4, support 5, and support 6. If the market breaks out to the south, chances are the market's going to, bears are going to score a point, pull back, then fall in an A, B, C, D. Score, these two are so close, probably take out both of them, pull back, then run down, score a point, pull back, then fall, take out both these at the same time. Either way, I want you to get in the habit of envisioning the future. You've got to do this on the breakout to the north and potential breakout to the south. Look at your risk. Overall, this is pretty good risk. These are 10 pips. So this offers great risk potential reward on this chart. Now, if the market breaks out of consolidation and returns into the pennant, it has a high percentage chance of going the other way. You may want your stop order at the low or the high to be a stop reverse order on the pennant. Check your equity management before you reverse your positions and avoid unnecessary additional losses. If the stop order is too far away, pass on the trade. Now here was a pennant. Market broke out to the north. You shouldn't have gotten in because you did not have a clear candle. But in this case, look at, this is that Gartley AB with, this is a down AB with an up A, B, C, D. See the Gartley? Okay. See the pennant? Broke out to the north. If you're watching this, okay, if you were watching this, you should not have entered because you didn't have a completely closed body of a candle. But if you did get in, if the market returns back into this consolidation, it has a high percentage chance of going the other way. So you may want to put your stop a stop reverse. After all, we're just in an uptrend or a downtrend. So we did go in the direction of the previous trend. Always keep that in mind. Now, step 7. The market enters into the buy zone, breaks out to the north because this is the trade. This was the ascending pennant. Okay, the uptrend stays in place, and we must wait till we have this closed candle. There's the closed candle. Therefore, we buy at the market. Look at how the market pulled back to the backside of the trend line, and we place our protective stop loss order at the last low. This engulfing bullish candle was almost a heads up that this breakout was going to be to the north. As always with all trades, look at that equity management, figure out that risk versus reward. Go find, once you have a defined breakout, and your homework should have been done way ahead of time, spread your Fibonacci's A, B to see where your C or your D's at, or find 4 levels of past resistance where you want to exit out before the bulls score a point and pull back, or cancel and replace. If you're cancel replacing, you've moved your stop from here up to here, and the market's keeping on going. After every trade, figure out your profit and loss statement and file your paperwork. Put it in your logbook. Now, if the pennant is on a larger time frame, because remember I said these appear on all time frames, if it's on a 4-hour, 8-hour daily chart, you then treat this like we do trading large consolidation, where we can sell resistance and buy support. Now, how do you do that? Now, this is a 4-hour time frame. Look at how the market is consolidated. Nice tweezer tops. Look at these tweezer tops right there. Look at how the market pulled back to the 786 of this. So in a case like this, when you're on a 4-hour chart, turn to a smaller time frame, short those tweezer tops, and if we are in an uptrend, this would then become the C, A, B, C. Now look at how the market rallied up, started to come back down, rallied up again. Okay, when it gets to these boundaries, turn to a smaller time frame. Turn to a smaller time frame, maybe a 60-minute chart, a 15-minute chart. Look for evening stars. Look for tweezer tops, engulfing bearish. Look for trend line breaks on a smaller time frame. Take the ride to the other side of the boundary. Look at here. If we were drawing an aggressive down trend line, the market broke that trend line, gave an engulfing bullish candle, and then went to the other side of the boundary, and it kept getting tighter and tighter until it breaks out, forms a nice morning star, tests the morning star in the direction of the previous trend, and then of course takes off. See how in this pennant, this is a 4-hour chart once again. Turn to those smaller time frames. Sell this resistance. Sell evening stars, engulfing bearish, tweezer tops on a smaller time frame. Here, buy. Once the market goes from here to here, buy. Okay? Buy tweezer bottoms, morning stars. Sell those tweezer tops. Look at these 2 tweezer tops right there. If you look closely, you got 2 tweezer tops. And then when it goes to the other side of the boundary, buy tweezer bottoms, morning stars, engulfing. Man, you can do this. Look at how this is going back and forth. This is 100, 200. Huge amounts of profit to be made there. Now, did this lesson teach you how to find an up and down price swing, why pennants form, that the markets consolidate and form pennants in a natural 618, 786 numerical sequence, how to find and draw several different pennants, how to locate buy and sell zones of a pennant, how to trade a pennant, and how to create that trading plan, and hopefully you'll learn to be disciplined to trade that plan, and of course, most importantly, where to place your protective stop loss order. If it didn't, then play this lesson again. And if it did, I recommend you play the lesson again anyway, because practice doesn't make perfect. Practice forms a habit. On behalf of everybody here at Market Traders Institute Worldwide, I'd like to say thank you for taking the time to properly educate yourself about penance. This is FX Chief.